Hey traders, welcome back to the How to Trade channel. Now, a few of our most popular videos here on this channel are all about the opening range breakout or ORB strategy. Now, we've covered it for stocks, we've covered it for Forex, and your response has been amazing. But here's the thing, while the ORB can be a truly great strategy, it's all about timing those entries just right. So if you're looking to level up your game, improve your ORB entries, and give yourself an edge with better risk versus reward ratios, this video's for you. We're going to dive into two powerful ways you can fine-tune your ORB entries and swing the odds in your favor. All right, let's jump in. Okay, a quick review. This is our 2-bar opening range breakout strategy. This is a basic formation and what a trade would look like. The first thing we have to do is define our first 2 bars. That's going to give us our 2-bar opening range. In this case, it's going to be on the US 30 market right after that Wall Street open on a 15-minute chart. Now, the second thing we need to do is identify an entry point. Now, our entry point needs to be the first bar that closes above or below this range. It's going to be above for a long or below for a short. Now, in this instance, we had a bar close that was sort of right on that line, right on the top of our ORB range. I would pass on that. That does not qualify. We're looking for an obvious breakout, something that's clear cut, that we aren't within maybe just a tick or two to avoid fake outs. That right there is by far the superior entry, and that's going to go ahead and be your buy entry in this instance. The second thing we do is look at our stop loss. Our stop loss is easy. It's going to be right beneath our opening range. Now, we can also be more conservative and play it very, very tight and put our stop loss right beneath the trigger bar, but on something like a 15-minute chart or an intraday time frame, I don't recommend that. I recommend sticking below the range. Profit target, this one's set as just a standard 1-to-1 because that's my favorite, but figure out whatever you'd like to do, 1-to-2s, 1-to-3s, 1-to-4s. Just understand that as your profit target gets bigger, as your risk versus reward goes higher and higher, your chance of success is going to decrease. And also, as we said in the initial ORB video, you can be looking for key levels, overnight highs, overnight lows, previous days highs, previous days lows, or you can just use smart money concepts such as areas of liquidity sweeps or order blocks. So that's a good look at the standard issue. Now, the reason behind this video, why we're making it, is we're going to talk about how to improve your entries, maybe within the range. Most of the time, we get triggered and then we pull back into this zone. We're going to talk about 2 ways that you can get in here and make your trade maybe with a little bit better entry and flip this risk versus reward in your favor. Okay, the first method that we're going to talk about on how to improve your ORB entries is going to be a very simple one, the 50% rule. Now, if you've watched any of my live streams, you know I love simple. I love simple probably more than anything in the world. This is as easy as it gets, guys. Let's go ahead and break it down for you. Okay, now if you remember our opening range breakout, our rules for entry are going to be the first bar close outside of our ORB range. So for a buy, it's going to be above the range. For a sell, it's going to be below the range. Well, in this instance, this is the same setup we just looked at for the standard ORB. You had an entry point right about here, which went to 44.8 1/4, somewhere in that zone. Now, our profit target is a 1-to-1. It can be anything you like. For the sake of this example, we're going to go ahead and just stick with that 1-to-1 because I'm going to show you how this entry swings the risk versus reward in your favor. Now, instead of entering, let's say, on this first bar that opens outside of our range, what can we do? We can wait, and almost inevitably, before we hit our profit targets, we do get some sort of pullback. So after we get that first bar closed, then we know the ORB is live, we're playing a breakout. This pullback potentially could get us long from inside of the ORB. Underneath the 50% rule, what you're going to do is you're going to simply enter the market at the halfway mark of your ORB. So you're going to go ahead, you're going to look at your high of your ORB, the low of your ORB, and just take the middle value, 50% of that ORB range, and that's going to be your entry point. So in this instance, what we had was we had a bar close above our ORB. That was going to be our long entry. We were going to go ahead and go long there, just looking for a modest 1-to-1 profit target with our stop loss beneath the bottom of the ORB. Well, instead of doing that, we're going to wait. We're going to wait for a better entry, a superior entry, and you're going to get that pullback potentially right to the 50% level of your ORB. In this case, we've got a buy limit order for our US 30, and that's going to improve our entry point a lot more than our conventional buy. So if our conventional buy was somewhere up there right around 44.822, and our new buy is down here, down around 44.726, our stop loss isn't going to move. It's going to be the same. It's going to be down there around 44.655 on this US 30 chart. Our new risk versus reward, instead of just being a basic 1-to-1 breakout trade, our new risk versus reward is going to be 1 to 3.7. We're going to risk 71 to win 268. That's absolutely fantastic stuff, guys. We have an opportunity here to really get long from a much superior entry point. Now, there's going to be cons to this. Number one, the number one drawback is going to be these breakaway winners. If this would have just went up and got its points, we're going to miss out on that, okay? But maybe this new risk versus reward, where all of a sudden we're looking at about a 1 to 4 payoff. We don't have to be right very often with a 1 to 4 payoff. 1 to 3.7, we can be have a much lower success rate and still generate nice profits. So that's sort of the rub here. You're going to miss those breakaway slam dunks. You're also going to jump on more losers because your risk versus reward is going to be a lot larger, and a lot of times you're going to be going against maybe some late session grain. But still, that 50% of that orb entry definitely swings the risk versus reward in your favor. And if you get into a situation where you're good enough picking orbs, or maybe a market just instantly retraces almost inevitably, and we see that a lot, you're going to be in these trades quite often. And with that kind of risk versus reward, you don't have to be right very often at all. So that's method number 1, the 50% rule. All right, let's move on to method number 2. Method number 2, Fibonacci retracements. Now, if you've watched any of my live streams, then you know my affection for Fibonacci retracements. Essentially, retracements and fractal geometry are the basis of my own personal trading strategy. Now, I absolutely love the way the Fibonacci retracements can be used with the opening range breakout. It's a little bit different than just buying or selling at 50% of that orb. We're going to need to see a directional move and then a pullback before we can get into the market. So we're going to go ahead and stick with our example that we've been using all day long. This is our standard issue orb trade, 15-minute orb on the US 30. It initially looked pretty good, and now it's pulling back into the orb. So in order for us to really maximize the power of this strategy of the opening range breakout, we've got to be able to deal with all scenarios. Now, in many people's opinion, you're a conventional entry. If you buy right there on this, you're anticipating a breakout, and if it pulls back, you have to be prepared to take a loss, and that's fine. But what about the validity of our opening range? We're trading the US 30 15-minute chart here. That opening 30 minutes of the New York session is a big deal, and in itself, on maybe a bullish type of a move, it could act as support. What we have to do is fine-tune our entry point, and Fibonacci retracements give us a dynamic way of doing that. Now, our 50% of our orb is great. It's easy. That can definitely help you flip risk versus reward. But Fibonacci's are dynamic, meaning the higher the high maybe on a bullish break before a pullback, or the lower the low on a bearish break before a pullback. That's going to give us a different set of entry points in a completely different profitability matrix or set of risk versus rewards. Now, there's a couple of keys that you need to remember before using this strategy. It's very easy to do. I'm going to show you how to do it right now. Number 1, you've got to have that precursor. You've got to have that bar that closed outside of the orb. In this case, there's our bullish bar, and on a bearish case, it would be closed beneath the orb. So right there, we closed above the orb. That's going to be our conventional entry. That's going to tell us that this orb is now on the roll and it's ready to trade. Okay, but instead of taking our conventional buy and playing it to a 1-to-1, we're going to try to figure out a Fibonacci retracement sequence that's going to give us the best possible entry from inside of our orb. It's going to be a superior type of an entry. So in order to do this, in this instance, it's a buy. What I want to do is I want to go right there to the bottom of my orb range. In this case, it's going to be the bottom of that first 30 minutes, that first 15-minute bar, but that first 30-minute chunk, those 2 bars, bottom of my range, right there. And I want to take it to the top of the move. That's as easy as Fibonacci's can really be, right there. Bottom of your orb, all the way to the top of this move, and now we've got a pullback, and we've got potential zones here. We've got a potential bid zone right there from the back end of the golden zone at 62%. We could buy there, or we could buy at 78. Now, are these entry points more sophisticated than a 50% level? Yes, they are. Because our anticipation here is that this trend is going to continue. We're up on the day, not much, but we're still up. We're anticipating that one of these levels is going to be downside support, and it's going to be sort of a launch point to the top side. So we can look at it as being maybe a little bit more specific and dialed in than just a broad 50%, but you'll see these levels not too different from 50%, are they? Well, this 78% down there at 44,718, if your stop loss is right down there at 44,655, you've got a tremendous chance just to hit your 1-to-1. But you know what else you can do? You don't have to stick to a 1-to-1. Perhaps you could do something like this. Maybe be dynamic. Maybe grade your trade according to time or manage your trade according to time. Maybe bring your profit target down to reflect a 1-to-1 or a 1-to-2 or a 1-to-3 on the fly after you get your entry points. So if you're going to use Fibonacci retracements, a couple of rules. The first thing is you've got to have a bar close outside of the orb to even begin thinking about using Fibbies. The second thing that you need to do is you need to go to the bottom or the top of the orb and go ahead and begin your Fibonacci retracements there. That's going to be your 100% level, and you're going to go ahead and draw those to the top or the bottom of the move, and that's going to give you your retracement sequence. From there, you've got your key levels right here. We've got 62% coming into play for us right now, and then you've got 78% down here inside of the orb. I would focus on those retracement levels that are inside of the orb. If not, you're probably just going to be taking a 38% that's very similar to your conventional entry, which is nothing wrong with that, but it doesn't really improve our risk versus reward. So that's how you use Fibonacci retracements, guys. Remember, it's relatively straightforward. One last time, you're going to go from the bottom of your range to the top of the move for a bullish break. You're going to go from the top of your range to the bottom of your move for a bearish break. You're going to sell on the bearish. You're going to buy on the bullish. In these levels, you could play. I love 38%. That's probably my favorite. 62% is great. 78% is also great. If you want to use 50%, I don't have a problem with that at all. But I would focus on those retracement levels that are inside of that orb range. All right, guys, that's it. That's method number 2. Method 1 and method 2 can both really help you swing these things, these orb trades, into a positive risk versus reward for you. Definitely check these out, kick the tires, and see if maybe they're right for you, or maybe you just want to play the conventional orb. And that's a wrap for today's video. But just a quick reminder, when you're applying these strategies to your orb setup, expect your winning percentage to drop a bit. Why? Because you'll be catching more market reversals and potentially missing out on those initial big breakaway winners. But don't sweat it. Here's the kicker. The reward can be much bigger. Now we're talking about risk versus reward ratios that can go as high as 1 to 3, 1 to 4, 1 to 5, and beyond. And they can do it regularly. That's where the potential in improving your entries really lies. So it's up to you to decide if these strategies and the orb fit your trading style. Now, if you found any value at all in this video, make sure to hit that like button, subscribe, and turn on notifications so you never miss a new entry. And also, if you need a broker, check out the game at switchmarkets.com. It's where ambition goes to thrive. All right, we'll catch you on the next one.